Hello traders, what is going on? So this session very special, very ad hoc. So I just want to go through three counters that appears on the Singapore scanner for today, which is 28th of December 2021. So I just recently uploaded this scanner result for today. So if you guys are fast hand, fast leg, right? You probably saw the scanner result already. So we have RH Petrol Gas, Rex International, and ISDN on today's Singapore counter. And you can see that Rex International and ISDN actually have a pink color tab beside it. So the reason why I have a pink color tab there is because we have entered these two trades in the past. So previously we entered these two trade setup before. I think we hit the TP or we hit the stop loss. I don't know. Is probably either. I think Rex hit TP while ISDN hit stop loss, and now they are up on the scanner again. So this color coding, color tagging is very useful for a lot of purpose on TradingView. I mean, for me, I use it for this purpose in order to tag counters so that when they shows up in the scanner, right, I will immediately know, this one I have entered before, this one I have taken profit before lah. Yeah, so that's basically how I manage my trades, but that's not what we are going to talk about today. So since Rex and ISDN have came up on the scanner before, right? Sorry, since Rex and ISDN, we have taken trades on these two counters before, and now that they are on the scanner, I want to discuss whether if these three trades are worth taking or not. So firstly, a disclaimer out there. This one, I think I've put this disclaimer up on the Patreon post saying that counters that shows up in the scanner, they are not automatically close your eyes and go and buy that kind of counter. What the scanner does is it helps you filter out the market to see which are the good counters. So after the scanner has filtered out the market for you already, you are still required to individually look at the stock one by one to see how is the chart structure like, whether you should enter or not. And of course, based on your strategy, you can decide whether this counter is worth entering or not, because the scanner itself is not a strategy. Okay, so please don't blindly enter counters on the scanner. Okay, please apply your own risk management, own strategy. So what I'm going to do now here is I'm going to look at three counters and I am going to apply my strategy to see if these three counters is worth entering. So one look at these three counters, you will notice all of them have something in common. These are counters that used to be very high price in the past, but somehow they become like they become a trash penny lah, as I would call it. They become a trash penny counter. So this is RH Petrol Gas and Rex International also. You can see it's very similar. The chart pattern is very similar. ISDN also. The chart pattern is very similar. Okay, so that's the first thing in common. Now, the second thing is common is that they previously have rallied. And then now they are rebounding from the support. So this is a rebound from support trade. Okay, so this is RH Petrol Gas. This is Rex, and this is ISDN. Okay, so these are rebound from support trade. So just by looking at these three charts, right? Personally for me, I definitely will not enter any of the three of them because I am now currently avoiding rebound from support trade. So for those who are not familiar with it, right, I have went through this in my statistical report. So I actually uploaded a statistical report not long ago on the entire trade data of Nimbus Capital trades that we have taken for the whole of 2021. And within the entire 2021 data, right, we realized that the rebound from support trades are the least successful. They have the lowest winning rate. So from that data, I can deduce that maybe I am going to avoid these kind of trades in the future. And in the Christmas special webinar also, I went through in length about how I feel about all these rebound from support trades. So if you missed that webinar, right, you can go and take a look at it. Also, I will put it up in the link lah. Okay. So, but if you are dying to trade some Singapore counter, it is not to say that these are very bad trades. In fact, let me show you the statistic. Let me show you the statistic. So for the rebound from support trade, right? It is it is slightly less than 50% winning rate. Okay, it's slightly less than 50% winning rate. So the rest of the strategy have more than 50%. Classic have actually the highest winning rate. Bottom have actually surprisingly have a higher winning rate compared to support. So it is not to say that you enter ready, confirm lose. It is still quite, I would say, very close to 50. It is about 44% winning rate for support trade setup. So if you go for this trade, it is like 45-55% chance. So up to you. But of course, as with this kind of trades, right, they do come with a so-called high risk, high reward. Okay. So in terms of the risk reward ratio wise, perhaps they are much more desirable, but in return, the winning rate is not very good. So once again, this winning rate versus risk reward ratio is also something that I have mentioned in my statistic guide, which you can find here. Resources you can find here, understanding trading statistics. So please do not get blinded by the risk reward ratio. Don't simply jump into this trade because of the risk reward ratio alone. The winning rate plays a huge role. Okay. But despite all my advice, if you are still looking to enter one of them, right, because maybe you have like a crush on one of these counter, or maybe you have some emotional attachment that you cannot control yourself, right? I will say that Rex International is actually the better one. Why do I say that? It is because if you look at RH Petrol Gas, right, it currently has 2 resistance already. So it hit the resistance the first time. So the first time it hit here, right? So this was the first established resistance. And then after that, it hit the resistance again. So it kind of shows that there are still a lot of seller present, and most likely the third time maybe I'm not that confident now. Whereas if you look at Rex International, right, it only have one established resistance. It is going back up there to retest that resistance again. So maybe I might I might prefer Rex International. And in fact, this seems like a potential higher low. Okay, potential, not established yet, potential, because it can go left, right, then come down. Then this is not a higher low already. Okay, in fact, this will become the lower high already. So Rex is still somewhat looking better compared to RH Petrol Gas, but I would say ISDN is actually the worst because it has 3 resistance, and the resistance are like up, down, up, down, up, down. So it's very random, not really predictable, not really consistent, not predictable, but rather it's not really very consistent, and it's very hard to trade when you are facing with this kind of chart. So you can see that actually this one we have a loss on it. It like kind of bluff people with the breakout, and then after that it decide to come all the way down. Whereas if you look at RH Petrol Gas, it is at least give you chance lah. It didn't give you like a fake breakout trade lah. Where Rex International also we haven't tested the resistance yet. So I will say among the 3 ISDN is the worst. RH Petrol Gas is the second, but still I will avoid it like a plague. Rex is so far so good. Rex is so far so good. I think Rex, among the three of them, it is the better one lah. At least you also have a double bottom, like a double bottom on the short time frame to let you know that, hey, okay, this one at least should be able to go back up to the previous resistance. For RH Petrogas, it does have a double bottom also. It does have a double bottom, but it also have a previous low that is slightly lower. So now that I think about it, maybe 50-50 lah, between RH and Rex International 50-50. They are both oil and gas related contract drilling, but still I believe ISDN to be the worst out of the three. So that is basically how I look at my scanner when I'm looking to trade. And not only I look at the charts, I also take a look at what are my previous performance, and there's a lot of thoughts going into each trades that I take lah. So it is not like just look at something and then, oh my god, Rex can trade ready and then go and anyhow like that. We don't we do put in a lot of effort into our trade setup lah. Okay, so if you decide to trade Rex, right? If you decide to trade Rex, I can recommend a stop loss at least at 250. At least, at least. It is about 18% down, and that is the minimum risk that you need to be able to take for Rex. If you cannot take that risk, right, then most likely this trade is not for you. Okay, this trade is probably not for you, because you can see that it is quite a volatile counter, and when it goes sideways, right, it can just swing 18-19% very easily lah. And you also do not want to place your stop loss on the dot at 0.26. Give it some breathing room, okay? Please let it let it breathe a bit. Price need to be able to move. It is like not hit the dot and then go like that, okay? So 250 will be a good stop loss level. And of course, the resistance will be your so-called your first TP level. The resistance will be your first TP level. So if it hit the resistance or your TP, right, you can actually take partial profit and hope that it consolidate a bit and then go up some more. But if it comes back down, right, at least you got some profit there lah, and you don't really lose out lah. So the key thing, the key advantages of taking support trade is that you have the first profit at the previous resistance, and if it does continue to rally, right, now you have a very, very strong position. But that position strong or not is dependent on whether it can break out above your first resistance level or not. And usually when the overall market is weak, and like especially Singapore market, not a very good market, or if the trend is weak, then most likely it can get resisted and come back down lah. But given that Rex have continuously been breaking support and continuously have been breaking resistance, and the support is like getting higher and higher, right? I think among the three, this one will be better lah. This one will be better. But of course, this is with the assumption that you still want to take the support trade. So we are just looking within the scope of these three rebound from support trade. And if there are other counters that are available out there that have a better trend, better candle breakout resistance, then maybe you might want to go for those trades. You are not restricted to this trade. For example, if I have the money to enter only one position, right, why on earth will I go for Rex International when I have things like Marvel? I can enter Marvel. I can enter Costco. Costco is still very near the entry price level, and it is like the trend is so good, it's like all-time high. I might choose to enter Micron. Maybe not this one too high already. I mean, you get what I mean. Since there are better trade setup in the US market, why would you want to enter this kind of rebound from support trade? So these are some of the things that you need to think through when you are trading. You cannot look at a chart in a vacuum. This is what I always mention in my most recent webinars. If you look at REX and you ask me, this one can buy or not, I can't give you an answer because can buy with respect to what? Oh, okay, can buy this, but I can also buy Marvel or Costco, and I rather buy Marvel and Costco. I'm not going to buy Rex Internet. So you must learn how to compare and contrast. Okay, so hopefully this short ad hoc section give you like a rough insight to how I look at scanners, how I pick certain trades, and how I make decision on whether certain trades should be taken or better be left alone. So personally, in this case, I'm gonna leave them alone. If you die want to make a trade, right, then you can go for Rex International. I wouldn't touch ISDN. Okay. Have a great day, everyone, and stay safe.